Good evening. Ira Epstein, and here we are on Tuesday, the 5th of August, 2025. And the time, 5:55 p.m. Central Time. You know, yesterday I left you off in these videos saying that it wouldn't surprise me if, according to the Yale Hirsch of the Trader's Almanac, that the market's going to get a reversal on Tuesday after a strong rally in stock indices on a Monday. It's exactly what occurred. The strongest today of all of the indices was the Russell, as the buyers on the break showed up for what we call the lower tier stocks, not wanting to pay up for the big boys. And that makes sense in this type of market. In addition, you're in August. If you're looking for home run trades in August, you're probably going to be very disappointed. There's always one or two. There's always a slugger out there. There's always some stock that takes off, so on. But if you're playing the indices, as we're covering right here, in the futures, I don't think I'd get married to the idea of a big home run. Could it happen? Anything can happen. That's why, the markets are the markets. In the gold, you seem to be married into the 3,400 plus range now. Silver's fighting a battle at the $38 an ounce zone. The dollar index is fighting for direction right now. It's trying to have an uptrend, but as you'll see in a few minutes, if this market starts breaking down from here, it's problematic for it. On the energy markets, I don't understand the people that want to be bullish in the Brent when you're going to add 500,000 more barrels, and probably even more than that, because a lot of the countries that had barrels to produce didn't do it. And they can all come back up to whatever their quotas are, and I'm not expecting strength out of the market at this point. Bonds and notes, they're sort of drifting at this point. As you can see, Bitcoin has slipped back under the 114,000 barrier, and that made me smile just because I thought that maybe that's what could happen. And I told traders that while I was friendly a week ago, I said, no, you can't hold on to those positions, and that was the right thing to do. Now, in terms of news, tomorrow's not a big news day. You're going to get the Mortgage Bankers Association number coming out at 6 in the morning. You're going to get the petroleum stocks numbers, and here's the estimates from the EIA. I haven't seen anything with the Swiss president and the economic minister that flew over to the United States today to meet trade negotiators to get a better deal for Switzerland. And I understand Japan's prime minister is flying in to try to negotiate something better for Japan than the 27% tariff on the cars. President Trump today said he's about to punish Brazil even more for defying what he wants, and he doesn't want them buying oil from Russia. They're going to do it. In fact, Modi has flown to Russia already. So the defiance lines are set up. By Thursday or Friday, we'll hear what the president does with Putin. Steve Witkoff is off to the races to Russia to see what they can do before the sanctions hit, if anything. Russia is offering some nonsense about they'll stop aerial strikes of some type as a give-in. That doesn't mean the fighting has stopped. If that's enough, maybe that's a starting point and the president won't do anything. I don't know. We'll see how this all plays out. And today we saw 3 countries from NATO give a substantial amount of money in pledge now for Ukraine to get more military equipment, including Patriot missiles. So I think that that's important. So let's go, if we could, over to the charts and see just what we've got. And let's start off with the S&P, which for the week is up nearly a percentage point. Nothing big, obviously. You can see you've developed a near-term trading range with a top there and a bottom right through here. And that's given you a higher high. But now with tonight's action, you have lower highs and lower lows. The market's re-entered a downtrend pattern, and it's under the 18-day average. So what the pros might be doing is they might be nibbling on the short side at 63.53, but if the market gets much over 63.77.5, I wouldn't be surprised if they just ran for the hills and called it a day. If the market does break and satisfies that, maybe the 62.60 lower Bollinger Band might be a zone, and momentum is down and not oversold. When you look at the NASDAQ, it's the same setup. Lower highs, lower lows. So I think the bears might be looking at this 23,250 level, hoping that if a sale came in, could they get it down just under the 23,000 level, the lower Bollinger Band. When we take a look at the Dow, it's the same. You now have a market, or do you? You do. You've got lower highs, lower lows trying to be at work here. I wouldn't want to see today's highs taken out. If so, that would be a problem because that would take away the lower high pattern that you're getting right now. And in the Russell, it was a sign of strength. When this market stood up against all the other indices, held, but it's probably going to have trouble at the 18-day average of closes. We'll see if that is, in fact, the case. In the DAX, as I just said to you, I thought the market had overdone it under the Bollinger Band bottom, and it snapped back rather smartly. I think the pros are covering shorts. I didn't say they're going long, but I do think their short covering went on. In the bonds and notes, are we going to develop an embedded reading? It takes 3 days over an 80 level in order to get that. You had one on today, day before, not the day before. So tomorrow, Wednesday, will determine if you have the embedded reading. If so, I think on breaks, you're going to see strong buying between, in the 30-year bond, the 114.9 level to 113.26 if you embed. So that's something I'd be looking at. And in the 5-year, it's not the same. You're overbought. The place in the longer end of the market, not the shorter term, is what that chart is saying to me. Now, in the dollar index, for the moment, you have higher lows, higher highs with the close. If the market takes out Monday's low, you break that pattern. And if you close under 98.16, my work will then turn bearish with lower highs, then a lower low under the 18-day average of momentum pointing down. So I think tomorrow's an important day here. And the euro might be able, if you can get through the highs of Monday, get back to the 18-day average to fight a battle and say that it dropped far enough and now it's got to figure out what's next for it. In the British pound, you're correcting an oversold condition. Look for resistance between the 100-day average now and then the 18. I don't see the market picking up and running just yet, but it could happen. In Bitcoin, no. I've been bearish on it recently, and it's down to the lower Bollinger Band. If it sits and rides that band, as it's been doing, you could start embedding this and get a bigger break than people think. So it'd be worth watching to see what happens in the momentum. On the energy part of it, look at how this market just came from 72.82 down already $5 a barrel. And that's in what, 5 business days? Nothing flat. Same thing has happened basically in the WTI. Too oversold in these markets to get me interested on the short side. In the Rebob gas, you're making a stand. I don't know if it'll work or not at the 200-day average, but even that stand doesn't excite me because you're under the 18. And one of the things I teach clients is don't try to be a hero and get long under that 18-day average. Your bias is down when the market's under it. It's bullish when you're over it. Not the greatest place to be looking at the market right now. In natural gas, I'm in the bear camp. As I see the market, the embedded reading, you're getting a rally. I look for the rally to fail. I'm wrong when and if on the red line you close over the 21 level. You're nowhere near that at this point in time. So you put it all together, you're looking for game plans, you're looking for more in and out type trade right now than longer term trend trades. That's just how August often comes in. Remember, I think that the A-League traders in currencies take off at this time of the year, so always pay attention. August is one of the months with the European traders, the senior traders, try to take their vacation time. Some of them take off 3 weeks, 4 weeks at a time. I'm Ira. Do remember you can get any of our free offers up here by clicking on the icons, and I intend on doing a special report on futures maybe as early as tomorrow. I was looking today, and I'm going to set up the charts tomorrow. You take care. See you in the other videos tonight or in the morning video. Have a great evening.